Good evening, TheoTrade. This is Corey Rosenblumen. You're watching the Theo Nightly video for the 18th of November, 2019. We are going to start the week here, the week before Thanksgiving, with an update on the broader market. And by up, I mean up and not stopping. So we'll start with our weekly expected move. This is the chart for the S&P 500. Last week in Thursday night's video, I discussed a stair step to the upside. And that's what kind of fulfilled the information here, was discussing this particular information. So with the market frozen last week at the weekly midpoint, or I guess technically Friday's close, there was an equal chance of going up and down. But if we use this trend line and this structure here, we can actually see that the market did push up to the weekly expected move with a bull trend day on Friday. So let's push forward now into where we are. So that's going to take us into, there we are, this new week. And the updated levels are, and that's of course Friday's close, 3153 to the upside and 3087, roughly speaking, to the downside. Today was a flat session and the S&P, other markets were roughly unchanged. So we are right where we were last week with the market stuck in the middle of this expected move grid. Let's also take a look at our probability and volatility charting. This takes into account, again, the S&P 500. We're looking at our probability of expiring cone, and let's make that a little bit larger there. And going to the end of the year, we can see the market potentially pushing up to 3257 or down to 3000. And of course, that's just an option probability of expiring cone. And it just gives us guidance. We can also see trend lines moving up through these levels. The ADX, a trending indicator, is starting to push up in the trend zone, but I think these are more important for us on the intraday or short-term basis. Why do I say that? The average true range is another type of intraday or short-term volatility indicator, and that's hitting essentially new 2019 lows. That means volatility is compressed. We don't need an indicator to tell us that. We can look at implied volatility itself. And that is, once again, scraping the lower bound of 2019's zone. That's also true again in the ATR, the average true range. So what does that mean? It's not mean to be a broken record here, but low volatility leads to high volatility, just like these, right? Low volatility, high volatility, low volatility, high volatility, low and then high. And by high volatility, we just mean a pullback or a retracement against this ongoing, at least at this point, nonstop uptrend in the market. So that is the guiding principle of this week and into next week. Let's take one look at our intraday, or the new 52-week highs of intraday trending stocks or bullish candidates that in the S&P 500 are making new 52-week highs, and in some cases, new all-time highs. I have it sorted as usual. We'll make sure that is sorted there by the sector. So taking a look at what the sector is, or sectors are, we can see a cluster of information technology sectors. And that's not necessarily bearish. If we wanted to see bearish environment or a bearish suggestion, we want to see utilities. You only see one, and that's PPL. We also want to see consumer staples. We aren't seeing that. So that cannot be determined, at least by this information today, as a bearish signal. So 43 stocks in the S&P 500 just made new 52-week highs, continuing uptrends in motion. I do want to point out a couple of names because we probably don't know WellCare and Assurant, Fortinet, but I bet we know Apple. So let's sort these numerous candidates by market cap. So all we have to do there is just go to the market cap tab and then sort. So the stocks making new 52-week highs on our scan in the S&P 500 sorted by market capitalization, well, that is Apple, Microsoft, Google, AT&T, and Home Depot, and Nvidia as well. and some of the other ones you may be familiar with or may trade or have open positions on. Let's take a look quickly at some of those. So Apple, we'll start the conversation with Apple because just like the S&P 500 or the Nasdaq itself, you're seeing Apple extend all the way higher without any pullbacks. So that doesn't give us a good spot to get on the trend train. We do that with pullbacks or retracements. But nevertheless, for a broad market perspective, this is one of those driving factors of why the market just won't seem to get a pullback or retracement lower, as I think everybody in the business thinks that it should. And then Microsoft, another candidate, also had a breakout. So these trend lines will go ahead and update those, extending from the 2019 lows, not the perfect upper trend line, but we do see Microsoft shares breaking through 140, and that has led to a gap and go scenario. And that scenario is taking place on higher volume. And you can certainly see in the right side of the chart our implied volatility if you're interested in keeping tabs on the stocks we're looking at. So Microsoft is in an extended run, multiple days to the upside, strong bull volume, and that's a bullish sign for the broader market. Google also is joining the broader uptrend. This one might not be as bullish because there are a couple of retracements. Right? As a trader, we want to find something strong and join into that trend, but do so with risk control on pullbacks or retracements or flags. So Google actually has given a couple of those instances or trade setups, but even it has really low volatility or implied volatility for 2019, and that keeps going. It is better to join into a trending market with retracement trades than just randomly. And we'll finish with Home Depot, which continues its uptrend, and we'll draw some trend lines on the lower frame, and we'll just connect those, just how we draw trend lines. We are seeing an overextension, and that just means market did not fall down to these prior levels, didn't test out this lower trend line, and has stayed at the top. Again, we're looking to buy pullbacks or retracements on rising moving averages, rising trend lines, or any other type of bullish trend continuity strategy. Like Microsoft and others, Home Depot is getting a pickup in bullish volume in today's session. So back to the S&P 500, even though broader volume is declining, we still see the market rallying. And that's can be a quite confusing scenario. Nonetheless, we can look at the Nasdaq, which also has new highs on a gap and go scenario, thanks to other tech names we saw earlier, as does the Dow Jones Industrial Index, which closed roughly at a key level, which is 28,000 in today's session. Finally, the Russell is back into 1,600. So as we look to frame our trades into any type of strategies or take off or roll, open positions, verticals, or any other type of in-out spread or other position on the swing account, we'll always be watching 1,600 in the Russell, 28,000 in the Dow, and of course, less obvious levels in the S&P 500. It just means caution, careful, and patience is the name of the game, as we are keeping through a bull rally, bull market in November. As always, be careful and safe. This is Corey Rosenblum with your Theo Nightly video for November 18, 2019.